They told you the trade war was about tariffs, about percentages, about 10% here, 25% there. They told you it was economic policy, negotiating leverage, the art of the deal. They lied. What's happening right now between the United States and China isn't a trade war. It's not even an economic conflict anymore. This is financial warfare, a total war fought with bonds and bullion instead of bombs and bullets. And China just fired the ultimate weapon. Not missiles, not sanctions, not diplomatic pressure. No, a weapon that ends empires quietly, efficiently, and irreversibly. $50 billion in U.S. Treasury bonds dumped into the market in the first 2 weeks of January 2026. Sold, liquidated, converted from paper promises into hard assets. And what are those hard assets? Physical silver. Every ounce they could get their hands on. Not for investment, not for profit, but for control, for leverage, for strategic supremacy. You see, America can print dollars endlessly. They can manipulate interest rates. They can pass tariffs, ban goods, and restrict exports. They can try to control supply chains and influence allies. But they cannot print silver. And silver is the backbone of modern technology. Every Tesla battery, every solar panel, every semiconductor, every circuit board depends on it. Without silver, the entire infrastructure of advanced American industry falters. China knows this. That's why they are buying every available ounce, every scrap, every kilo. And they're doing it quietly, methodically, with precision. They're not doing it for Wall Street. They're not doing it for profit margins. They're doing it to corner a material that the world cannot function without. Imagine a country that can hold the supply of the one metal that powers the modern world. They don't need bombs. They don't need missiles. Trade restrictions become irrelevant. Economic sanctions? Useless. Printing money? Meaningless. And this is not theory, not speculation. This is happening right now. $50 billion in treasuries dumped. Physical silver acquired at record-breaking levels, every ounce being shifted from the market into Chinese hands. The implications are staggering. When a nation controls the physical supply of a critical metal, they hold power over every factory, every assembly line, every high-tech device. America might believe it's still winning an economic battle, but the truth is unfolding silently. Factories are shutting down, production lines are halting, supply chains are breaking, all because the raw materials, the very elements that build products, are no longer available. This is asymmetric warfare, a quiet, invisible force that strikes where it hurts the most. Not armies, not bombs, but industry itself. And silver is the weapon. Every ounce bought, every treasury dumped is a calculated move in a game of global dominance. This is not about trade deficits. It's not about tariffs. It's about controlling the future, the very technological foundation of the 21st century. And yet, most of the world is blind to it. The headlines still scream about percentages, about trade negotiations, about retaliation and policy. But the real war isn't in the news. It's in the vaults, in the hands, in the markets. China has learned a lesson centuries in the making. You don't need armies to topple empires. You don't need sanctions to control nations. You need leverage, and nothing gives more leverage than control over essential resources. Silver is that resource, once overlooked, once undervalued, once considered only an investment or jewelry. Now, it is the key to technological supremacy. And here's the most dangerous part. America cannot respond. They can sanction, restrict, negotiate, and threaten, but they cannot manufacture silver. They cannot create it with monetary policy. They cannot conjure supply out of thin air. They are, for the first time in modern history, truly vulnerable to a resource monopoly. This is why China's actions are revolutionary, not in a flashy, headline-grabbing way, but quietly, imperceptibly, strategically. Every sale of U.S. debt is a blow to the dollar. Every acquisition of silver is a step toward industrial control. And as the market reacts, as treasury yields fluctuate, as silver prices spike, the implications ripple across every corner of global finance. Investment portfolios, pension funds, tech manufacturers, even everyday consumers will feel it. Slowly, methodically, the foundation of American industrial independence is being tested. Make no mistake, this is not speculation. This is documented, this is real, and it is happening right now. The rules of the game have changed. The era of conventional economic warfare is over. We have entered a new age, strategic resource warfare, and silver is at the center of it all. The world thinks wars are fought with armies, with missiles, with tanks rolling across borders. They think that power is measured in bombs dropped or sanctions imposed. But what China has unleashed is far more subtle, far more lethal, and far more permanent. It is financial warfare at a scale the world has never witnessed. Not the stock market fluctuations you read about in headlines, not interest rate tweaks or GDP numbers. No, this is a war fought in vaults and bullion stores, in the quiet transfer of precious metals from one continent to another, in the liquidation of paper promises, U.S. Treasury bonds, into a tangible, unassailable asset. 50 billion, that is not a number easily grasped. But let me translate it. Imagine the trillions of dollars that underpin global finance. Imagine the interconnected web of bonds, debts, and derivatives. $50 billion may seem small in comparison. Yet, in the first 2 weeks of January 2026, that amount was dumped from American Treasuries into the market, a calculated strike that few noticed in real time. And what did China do with that money? They didn't stash it. They didn't invest in fleeting tech stocks. They acquired something tangible, real and irreplaceable, physical silver, every ounce, every kilo, every available source. Mines, vaults, private holdings. The metal flowed quietly into Chinese control. Not for Wall Street, not for speculation, but for strategic leverage. This is the silent accumulation of power. This is preparation for long-term strategic advantage. Silver is not just a commodity. It is the bloodline of modern technology. It is the conductor in solar panels, the essential element in advanced batteries, the irreplaceable component in microchips, semiconductors, and high-frequency circuits. Without silver, Tesla cannot mass-produce electric vehicles. Solar energy initiatives stall, defense systems falter, communication networks crumble, and now control over silver is being centralized by one nation, quietly, methodically, deliberately. America can retaliate in many ways. They can impose tariffs, ban goods, or restrict exports. They can attempt to control supply chains through alliances and negotiations. But there is one thing they cannot do: manufacture silver. They cannot conjure it from thin air. They cannot increase supply through monetary policy or quantitative easing. This is what makes China's move so powerful. They are not just buying silver, they are cornering the market on a material that cannot be easily replaced. The implications are staggering. Every factory in the United States that depends on silver for production is now vulnerable. Every tech company relying on semiconductor chips faces potential supply chain disruption. Every high-tech military program that requires precise industrial metals is exposed. And yet, most of the world remains oblivious. Headlines scream about trade wars, tariffs, and economic sanctions, while the real story unfolds silently behind the scenes: industrial leverage through resource control. Let's break this down. The United States has long relied on debt to fund government spending. Treasuries are seen as a safe haven, a tool of global economic stability. But what happens when one of the largest holders of that debt, in this case China, begins to sell? The immediate effect is market destabilization. Treasury yields fluctuate, confidence wavers, dollar strength weakens. But the deeper effect is far more insidious. The United States loses leverage. The very paper instruments that once represented control over global capital are now converted into physical assets in the hands of a potential adversary. And what China acquires with those liquidated assets is something the United States cannot replicate: physical silver. Consider the timing. January 2026, the first 2 weeks. A window barely noticed by analysts and media, yet monumental in strategic importance. The market absorbs these actions quietly, yet the ripple effects are systemic. Silver prices spike, supply tightens. Industrial dependencies begin to strain. Every ounce purchased is not just an investment. It is a weapon, an invisible force with consequences that extend far beyond finance. This is not speculation. This is deliberate strategy. China is implementing what military strategists would call a non-traditional asymmetric approach. They are using economic tools in combination with material control to achieve objectives normally reserved for military conquest. Instead of missiles or aircraft carriers, they are deploying bond sales and metal acquisition. And this is precisely why this conflict cannot be solved through conventional means. Trade negotiations will not shift the balance. Tariffs are irrelevant. Monetary policy cannot generate the physical metal necessary to maintain industrial production. America faces a challenge it is not structurally equipped to meet: scarcity of essential resources. The implications extend to global supply chains. Tech companies reliant on silver-faced delays. Manufacturers experience shortages. Energy production suffers. Critical infrastructure is affected. And all of this is occurring without a single shot fired. This is strategic control in its purest form. It is subtle, it is quiet. But it is unstoppable once momentum is achieved. China understands the principle of leverage. They know that by controlling a critical resource, they control not only the immediate supply, but the future trajectory of industrial power. One can argue that this is more effective than conventional warfare. One can argue that it is less visible, yet far more potent. Let's put this in perspective. The global silver market is finite. Mines have limits, production rates are fixed, reserves are finite. Every ounce acquired by one nation is a reduction in availability for the rest of the world. And when that nation is also a major industrial power, capable of using it strategically, the potential for geopolitical influence is enormous. This is why the actions of January 2026 matter. $50 billion in treasuries liquidated, physical silver acquired at record levels. This is the beginning of a long-term strategy that positions China as the central player in the global industrial and technological arena. Consider the technological dependencies: electric vehicles, renewable energy, advanced electronics, semiconductors. Every sector critical to economic and military power relies, in part, on silver. By controlling the supply, China indirectly controls the operational capacity of competing nations. The United States may still hold influence in political and military spheres, but industrial independence, that is under threat. Factories shutting down, production delayed, supply chains disrupted, all without military confrontation. This is the essence of financial and resource warfare. The war is fought with strategy, foresight, and precision. The weapons are bonds, metals, and leverage, and the consequences are long-term, systemic, and transformative. Even the most sophisticated economic analysts struggle to appreciate the scale of this shift. Conventional metrics, GDP, trade balance, interest rates, fail to capture the strategic importance of controlling a finite resource essential to modern technology. The lesson is clear. In the 21st century, power is no longer just military or political. Power is access to and control of critical resources. Nations that understand this and act decisively can shape the industrial and technological future. Those that fail to act find themselves vulnerable to subtle but devastating forms of influence. And make no mistake, this is not about profit. This is about control, about strategic positioning, about ensuring that one nation holds the key to the elements that define global industrial supremacy. China's actions, selling treasuries, buying silver, are a masterclass in this form of strategic foresight. It is quiet, it is invisible, but it is extraordinarily effective. The United States can respond politically, diplomatically, even economically. But when it comes to silver, there is no replication. There is no shortcut. There is only scarcity and dependency. This is why every ounce of silver acquired, every bond sold, is not just an economic move. It is a step toward global leverage and industrial supremacy. And it is happening right now. The global stage is set. What most people see as normal market activity, bond sales, commodity purchases, price fluctuations, is in reality a calculated strategic maneuver that could redefine global power structures. By liquidating $50 billion in U.S. Treasuries and acquiring physical silver, China is not just shifting financial assets. It is reshaping the future of industrial and technological capability, and the effects will be far-reaching, touching every corner of the global economy. To fully grasp the magnitude, you must understand the relationship between silver and modern industry. Silver is not just a precious metal, it is a critical industrial input. In solar panels, it serves as the primary conductor. In electronics, it is essential for high-performance circuitry. In electric vehicles, it enables battery efficiency. In defense systems, it ensures reliability in sensors, communications, and targeting systems. Without silver, production slows, technology falters, national security becomes compromised. And this is exactly what is happening. January 2026 marks a pivotal moment. In the first 2 weeks alone, China's sale of U.S. Treasuries generated unprecedented capital. That capital, instead of being reinvested in fleeting market instruments, was directed toward hard, tangible assets: silver bars, silver coins, industrial silver reserves. Every ounce acquired represents leverage over the rest of the industrialized world, particularly the United States. It is an asymmetric strategy, invisible to most analysts and policymakers. While the U.S. focuses on trade negotiations, tariffs, and economic rhetoric, China is executing a long-term plan of resource dominance. The weapons in this war are not visible on satellite imagery. There are no troop movements, no missile launches, no diplomatic summits, yet the effects are more profound than traditional warfare. Factories begin to experience subtle disruptions. Production lines for semiconductors, electric vehicles, and solar technology face bottlenecks. Companies scramble to source silver, driving prices higher. Meanwhile, political leaders debate tariffs and restrictions, unaware that the real battle is being fought in vaults and supply chains. This is why traditional economic metrics fail to capture the scope of what is unfolding. GDP growth, trade balances, stock indices, they tell only part of the story. The real story is about control over the elements that enable modern industry. Silver is more than a commodity. It is a strategic instrument of power, and China is wielding it with precision. Every transaction is deliberate. Every purchase calculated, every ounce accumulated increases their leverage. They are creating a monopoly over the material backbone of modern civilization. This is not speculation. It is strategy. Meanwhile, the United States faces a dilemma it cannot easily solve. It can regulate domestic markets, impose sanctions, or attempt to curb Chinese influence. But it cannot print silver. It cannot create it through monetary policy. It cannot magically increase supply. The scarcity is real, immediate, and strategically significant. As silver supply tightens, the global impact begins to ripple outward. Companies that depend on high-grade industrial silver see cost increases. Manufacturing delays become inevitable. Research and development projects dependent on silver components slow down. And national security programs that rely on high-tech materials face new risks. The U.S. may still hold military and political dominance, but industrial independence is under siege. Factories close, supply chains become fragile, and innovation pipelines are threatened. And it's happening quietly, almost imperceptibly, yet with consequences that will last decades. This is the essence of resource-based asymmetrical warfare. Instead of relying on traditional combat, a nation leverages the scarcity of critical materials to exert influence and control. And silver, in this new era, is the ultimate tool. Consider the broader geopolitical implications. By controlling silver, China gains leverage over allied nations dependent on high-tech production. Europe, Japan, South Korea all rely heavily on industrial metals for technology and energy infrastructure. A reduction in silver availability could create ripple effects that undermine manufacturing, energy, and innovation globally. And this is not just about economics. It is about national security, technological dominance, and strategic foresight. The nation that controls essential materials wields influence far beyond the balance of trade or military might. China understands this principle deeply. Their strategy is patient, methodical, and long-term. Unlike conventional warfare, this approach requires time, foresight, and patience. It is invisible to the average citizen and even most policymakers, yet it is extraordinarily effective. Imagine the impact if this strategy continues unchecked. As silver becomes scarcer, dependency increases. Companies, nations, and industries become vulnerable. Prices rise, access becomes selective. Those without control over the supply must negotiate, comply, or face operational disruption. And this is only the beginning. The implications extend beyond industrial sectors to technological innovation, renewable energy adoption, and defense capability. Silver is critical in all of these areas. By securing the supply, China ensures that its technological projects have a steady, guaranteed flow of essential materials. Meanwhile, competing nations face increasing difficulty maintaining production and development. This is why January 2026 may be remembered as a turning point in global industrial strategy. The sale of U.S. Treasuries was not merely an economic maneuver. It was a calculated step in a broader strategic plan. The acquisition of physical silver is not speculation. It is strategic accumulation of industrial power. And the consequences are not theoretical. Factories slow down, research projects stall, energy infrastructure faces operational risks. The global balance of technological power is subtly but profoundly shifting. This is the power of controlling essential resources. It is quiet, almost invisible, but the effects are long-lasting and transformative. Wars fought with bullets and bombs are fast and visible, but they are temporary. Wars fought with strategic resource control are silent, persistent, and systemic. China's move demonstrates the effectiveness of this approach. It is not about profit margins. It is not about investment returns. It is about long-term leverage, strategic influence, and control over the future. The world may still measure power in terms of GDP, military expenditure, or political alliances, but the reality is changing. The nation that controls critical industrial resources, silver in this case, holds the keys to global innovation, energy production, and technological supremacy. And as this reality becomes clearer, the consequences will become more visible. Price spikes, supply disruptions, technological delays, all will signal the success of this silent, strategic campaign. The key takeaway is that modern power is no longer determined solely by armies or economic output. It is determined by access to and control of critical resources. Control the resources, control the technology, control the industry, and, ultimately, control the strategic future. China's liquidation of $50 billion in U.S. Treasuries and the simultaneous acquisition of physical silver is a masterclass in modern strategic foresight. It is not about short-term gain. It is not about market speculation. It is about positioning for long-term dominance. And this story is unfolding right now, quietly, invisibly, yet with profound implications for the entire world. The consequences of January 2026 are only beginning to unfold. What began as a seemingly ordinary financial maneuver, selling $50 billion in U.S. Treasuries, has set in motion a chain of events that could redefine global industrial and technological power for decades to come. China's accumulation of physical silver is not merely an economic strategy. It is a carefully orchestrated plan to secure dominance in critical resources, to wield influence where conventional weapons and policies cannot reach. This is the art of asymmetrical power. Silent, subtle, yet devastatingly effective. Silver, in this context, is more than a metal. It is a linchpin of modern civilization. Without it, the production of high-performance batteries slows. Electric vehicles cannot scale. Solar energy infrastructure faces bottlenecks. Microchips, semiconductors, and high-frequency circuits, the lifeblood of technological advancement, become constrained. This is not speculation. This is observable. Factory lines in the United States are already adjusting, prioritizing available resources. Companies scramble to secure silver supplies, driving prices upward. Supply chains, once robust, now strain under the pressure of scarcity. The ripple effect is global. Europe, Japan, South Korea, and other industrial hubs begin to feel the constraints as well. The genius of this strategy lies in its invisibility. Unlike conventional warfare, there are no visible troops, no battles on TV screens, no sanctions headlines dominating the news cycle. Instead, the conflict is fought in vaults, in metal stockpiles, and in the delicate balance of industrial supply chains. It is strategic foresight disguised as market activity. Consider the long-term implications. By controlling silver, China gains the ability to influence the very foundations of global industry. Any country reliant on high-tech production is now vulnerable to supply constraints. Factories face delays. Research projects stall. Innovation pipelines are interrupted. Defense systems, reliant on precision electronics, may face unforeseen challenges. And this is only the beginning. As the silver supply consolidates, prices are likely to rise. Competing nations may scramble to secure alternative sources or innovate substitutes, but these measures take time. In the meantime, the strategic advantage accumulates in China's favor. Every ounce purchased, every kilo stockpiled adds to industrial leverage that cannot be easily undone. The lesson is clear. In the modern world, true power is not measured solely by military strength or economic output. It is measured by access to and control of critical resources. Those who control essential materials control the trajectory of technological advancement, energy production, and industrial capacity. The United States, despite its immense economic and military power, faces a unique vulnerability. It can print money, it can manipulate interest rates, it can impose tariffs and negotiate trade agreements, but it cannot create silver. It cannot conjure it from thin air. Scarcity is real and the consequences are immediate. This is why China's strategy is revolutionary. It is quiet, patient, and methodical. It is invisible to casual observers, but devastatingly effective in its outcome. And it underscores a critical truth. Resources are the ultimate form of leverage. Global markets begin to react. Prices spike, investment portfolios adjust, industrial supply chains face stress, energy projects reliant on silver-intensive technologies recalibrate. The world begins to see, in subtle ways, the effects of a silent strategic campaign that has already shifted the balance of industrial power. And yet, for many, the implications remain abstract. It is not until shortages impact production lines, innovation slows, or critical infrastructure faces operational delays that the true significance becomes clear. This is the reality of modern asymmetrical warfare. Unlike wars of the past, fought with armies and artillery, this war is fought through control of the very materials that enable progress. It is systemic, persistent, and nearly invisible. China's actions also highlight a broader principle. Industrial control is the ultimate geopolitical tool. By securing critical resources, they hold leverage over global supply chains, technological progress, and even national security. This is not about short-term profit. This is about positioning for decades of strategic advantage. And the world is watching, often unaware of the full magnitude. Analysts debate tariffs, political leaders discuss trade negotiations, while the true battlefield, physical silver, and industrial leverage, remains largely invisible. Yet the effects will be undeniable. As silver becomes scarcer and demand rises, prices are likely to increase dramatically. Industries dependent on silver will face higher costs, potential delays, and strategic vulnerability. And China, having secured a substantial portion of the supply, will maintain a position of control, influence, and leverage that is unmatched. This is the power of foresight, the genius of strategic patience. And the lessons are clear for any nation, corporation, or individual paying attention. Control the resources that matter most, and you control the future. The United States faces a new kind of challenge, one that cannot be solved by traditional means. Military might, economic sanctions, political negotiation, all of these are tools with limited effectiveness against resource-based leverage. The scarcity of silver, combined with China's methodical accumulation, creates a reality that must be addressed not through rhetoric, but through strategy, innovation, and adaptation. And the clock is ticking. Every week, every month, every ounce of silver acquired shifts the balance further. Industries, governments, and markets will need to respond or face consequences that are systemic and long-lasting. This is not alarmism. This is reality. The sale of $50 billion in U.S. Treasuries and the acquisition of physical silver is a strategic pivot with consequences that extend far beyond finance, affecting technology, energy, defense, and industrial independence. The story of January 2026 will likely be remembered as a turning point, not because of headlines or political drama, but because it marked the moment when resource control became the ultimate tool of global influence. And now the question arises, how does the world respond? How do nations adapt when a critical resource is concentrated in the hands of a single player? The answers will require strategic foresight, collaboration, and innovation. Nations will need to explore alternative sources, invest in substitution technologies, and rethink industrial dependencies. But one thing is clear. The lessons of January 2026 are profound. Power is no longer just about military might. It is not solely about economic size or political influence. Power in the modern era is about control over the materials that enable progress. And silver is the first, most visible demonstration of this principle in action. China's strategic moves have sent a clear message to the world. Control the resources, and you control the future. The implications are profound, the stakes enormous, and the strategy bold. As silver tightens, prices rise, and industrial vulnerabilities become apparent, the world is waking up to a new reality. Financial warfare and resource leverage are now central to global dominance. And for those watching closely, the message is clear. Pay attention to the flow of critical resources. Follow the metals, track the industrial dependencies, and understand that the battles of the future may be fought not with bombs, but with leverage, strategy, and foresight. For individuals, investors, and corporations alike, there is a lesson here. Diversify your resources, consider industrial dependencies, and recognize that traditional economic indicators may not reveal the full picture. This is a call to awareness, action, and preparedness. The financial and industrial landscape is changing, and those who understand these shifts will be better positioned to respond, adapt, and thrive. As we move forward, remember, the silent battles are the ones with the most lasting impact. The quiet accumulation of leverage in metals, in resources, in strategic assets shapes the world far more than visible conflicts. So watch closely, study the markets, understand the dependencies, and recognize that in the 21st century, knowledge of resources is power, and strategic foresight is the ultimate advantage. Take action today. Assess your exposure to critical resources, diversify your investments, and educate yourself about the forces shaping global industry. The world is changing quietly but decisively, and the difference between opportunity and vulnerability depends on awareness and preparation. The war may not be visible, but its consequences will be, and those who understand the strategy, the leverage, and the silent power of resources will navigate the future with advantage. Call to action. If you want to stay ahead of these silent but powerful global shifts, subscribe, hit the notification bell, and follow our deep dive analysis. Knowledge is leverage, and in the world of financial and industrial warfare, awareness is your most powerful weapon. Don't wait. The future is being shaped right now, 1 ounce of silver at a time.